So, what should a business owner's tax strategy actually look like? One that's going to give you the tax savings you're looking for, the asset protection, and keep compounding year after year so that you keep more of that money in your pocket. This is the full framework that I walk every single one of my clients through so that they get results like you're seeing here. And if you want results like the screenshot above, it has nothing to do with some tax write off hack or some loophole that's going to magically save you $100,000 overnight. As much as I would love to sit here and tell you that, trust me, it would make my job way easier. It's just not realistic. See, the thing that creates those tax-free business owners you see all over social media, people building up their wealth, is they simply have a real strategy. Just like you have a marketing strategy or a business plan in place, you also need to have a financial strategy. But I bet no one has ever shown you one where they say, hey, here's what a real tax strategy looks like for you and how that could impact your situation. So in this video, I'm going to lay out piece by piece exactly what your tax strategy should include so that by the end of this, you have a clear picture of what good even looks like and you can optimize your current situation. And if your current strategy doesn't match up with what I'm showing you, that's your sign that something needs to change. So let me start by telling you what a tax strategy is not. Because most business owners I talk to, they think that they already have one, but they just don't. What they think their strategy is they have a CPA, they file their return every year, they get deductions and write-offs, they get on a year-end call with their accountant, and they write a check and they move on. But that's not a strategy. That's just the bare minimum to not get in trouble with the IRS, and low-hanging fruit you should just be doing anyways. This is like saying you have a fitness strategy because you own a gym membership. But access to the gym does not mean that you have already built a workout plan. Those are two separate things. You still need to create a specific plan to hit your specific goals. Same thing when it comes to your financials. Now, if you don't create that specific tax strategy to hit your specific goals as well, you're just going to run into the opposite problem, which is where most people are, which is they overpay taxes, they get lack of visibility into their money situation, and more things. This could be the equivalent to tens or hundreds of thousands of dollars a year lost in opportunity, depending on where you're at with your business. So let me show you what an actual tax strategy looks like. I'm going to break it down into 5 pieces that should be in place if you're running a business doing between $500K and $5 million per year. And real quick, if you want to make sure you actually aren't losing tens of thousands of dollars, even if you don't know you are, then book a free tax savings assessment with me. We'll identify the gaps in your taxes, cash flow, and profits. Clients that do this with us typically see at least $15,000 in immediate savings when we implement it. And you'll also walk away with a complete 12-month roadmap for free that you can keep so that you can keep more money in your bank account. If that interests you, link is in the description. So the first thing that we do to build an actual tax strategy is we do a tax audit. Before we touch a single strategy, I need to know exactly where you're at. And no, I'm not just going to take your word for it when you say you're at a current position, because you cannot build a strategy if you don't know exactly where you're starting from. As an example, this is what I'd be looking at if I was starting this with you. So I'd look at your last year's tax return. How much did you pay? What does your tax position look like? Last 12 months of your P&L. Where is your profit trending? What kind of expenses do you have? Your entity structure. Do you have an LLC? Did you elect an S Corp this year? Do you have a C Corp? Partnership? Investments? Do you own real estate, crypto? You have 401k or Roth IRA? Do you have stocks? Your accounting setup. Do you have a CPA, bookkeeper, CFO? Who's doing the accounting in this instance? And your cash reserves. How much do you have for investments and how much do you have saved in the bank? This step is about getting a clear, honest picture of your current tax position. And it's ironic that this is just the start of it, yet I've had so many conversations with businesses who have never even done this. They don't even know what they have as their current tax position. Nobody's ever sat down and said, here's where you are, here's what's working, and here's what's costing you money. If you don't even have this clarity, you can't even do steps two through 5. So from here, now that that's done, we can move on. So the next thing you do is you're going to use that audit and you're going to define goals. And what I don't want you to do is just set random goals or goals that you saw somebody else online saying that you should have. So here's a bad example. So you say, I want to cut my tax bill in half. Okay, cool. How exactly are you going to be doing that? Because there's multiple ways that you can do that. And what works for you at $1 million per year revenue might not work for someone else doing 500 grand per year. Or even another business is doing that same revenue as you. They'll have completely different circumstances and they might not be able to do what you can. And the reason is that no two business owners have the same exact assets, the same income, same family, same team, same overall financial picture. Everybody's usually a little different. So here's a diagram that perfectly summarizes it. And it's a little tough to see here, but you can see with all the check marks, certain check marks for these strategies that people can put into place only happen when you hit certain levels or you have certain things in place. So for example, this is businesses doing over 300,000 in profit. They can do a lot more tax strategies than a business doing under 300,000 in profit because they have more cash to play with. And then over here, it's capital gains. If someone has a lot more capital gains, they usually have more assets, more stocks. They can also do more tax strategies than someone that has less capital gains. Same thing with retirement accounts. Usually, if you have that, you can do more things than someone without retirement accounts. So, understanding which of these you have is what you need to understand to build the real strategy that works for you because you need to play to your strengths. You can't just pick random strategies out of a hat. It's not going to be super optimized for you and your position. So again, like I was saying, if you have capital gains, find out how to work with that. And if you don't have capital gains, what can you be doing instead? If you're able to exit in a few years, the strategies that you're going to do are going to look very different than if you're just trying to maximize cash flow for this year. And if your income jumped from 400 grand to $1.2 million a year, there are strategies that just became available to you that you couldn't have done before. So it's good to set financial goals, but they have to be relevant to your circumstances. Now we can start to see which strategies to deploy now that we have a clearer picture. So from here, the ones we're going to start to deploy is called core tax strategies. So these are foundational moves you should have in place for virtually every B2B service business owner, regardless of your revenue level. If you don't have some of these, you're just leaving easy, low-hanging fruit on the table. So things like income shifting, which is just electing an S corp, dialing in your owner's comp, maxing out retirement contributions, 401ks, IRAs, the Augusta rule, renting out your house to your business to get tax benefits, tax loss harvesting, you sell stocks at a loss so that you can take the tax benefits from them, investing into your HSA, and maximizing your tax write-offs. These are all non-negotiable, and there's dozens of them more that you've probably already heard all over social media. And if you're missing any of these, you're leaving money on the table every single year. And the further above 500 grand per year you go, the more money that you'll be losing. So have those in place. And now the next part is high income strategies. So up here, these are just the core ones that you need to have in place. They're just basic. But as you start to make more money, this is where things get really interesting. And it's going to start separating a basic tax plan from a real tax strategy. These are the strategies that you're going to unlock at higher income levels because you need the cash to be able to afford them. These are what really creates all the tax-free millionaires and the people paying around 0% taxes. So if you hear people boasting about doing that, they are almost 100% certain doing something on this list or maybe even a few things on this list. But not everyone needs these. If you're in the right situation, they can save you a significant amount of money because you're going to start leveraging your money in this case. So you put a little money into the investment and you get an outsized tax benefit because of it. That's the leverage that I'm talking about. So things like real estate investing. You invest into real estate and you get a whole lot more tax benefits than anything else. You can put stocks into charitable funds and you get a tax write-off for that. You can do oil and gas investing, which unlocks tax benefits and even passive income. Same with equipment leasing. Same with mineral donations and film production as well. If you're more creative, you can invest into certain movies and get a tax benefit for it. So there's a lot of different investments that you can start to invest into that are very tax leveraged. And the key with all of these is you need a lot of money and you got to be willing to take some risk. Not all of these are guaranteed to make you money, especially things like oil and gas. They can be quite risky and you can lose money on it. I wouldn't even say that these are all like necessary to do, even if you're making a ton of money. Some people just like to invest here, or they want to invest in the traditional stocks or crypto. Either one, it depends on your risk profile, but sometimes it is better just to make more money in the business, increase profits, improve cash flow, and just put the money into traditional stocks and crypto investments. So it's up to you, but if you want to be a little bit more aggressive and really get an outsized ROI, I would add 1 to 2 of these into your strategy. So the final part is that you want ongoing optimization. So here's where most tax strategies they start to fall apart because most people build them once and they never change them again. It's just a static document that might as well just sit on your shelf and not do anything. This is a major mistake, especially if you are scaling revenue, you're hiring team members, or you want to build more wealth. A real tax strategy is a living system. You'll update and tweak it as things change in your business throughout the year. This is what ongoing optimization would look like, again, if you were working with someone like myself. So you have things like quarterly planning, making sure each quarter we are up to date on revenue and income and adjusting and tweaking strategies as those two things start to change. You also have mid-year strategy calls. At the halfway point, are we ahead or behind what we were planning? And then you have year end planning, which is just locking in savings and last minute additions as needed. If your CPA, instead of doing this, calls you in January and just says, here's what you owe, there was no conversation in early Q4, you did no quarterly check in, and there was no proactive planning throughout the year, you were severely slacking on this part here. And it's not your fault. You just have an outdated accounting system that could be improved and get you even better results. So that's everything. Let me put it all together so I can recap what a real tax strategy will contain. It's going to contain the audit, knowing exactly where you stand, defining your goals, but do it based on your circumstances and position. Remember, you want specific goals for this. You need your core strategies. These are foundational ones that everybody should be implementing. It's just easy, low-hanging fruit. High income strategies, once you start to make really big dollars, like 7 figures and above, you can start to deploy some of that cash into tax leveraged investments and see a huge ROI on your tax bill there. And then to wrap it up is ongoing optimization, those quarterly projections, year-end planning, and frequent reviews so that the strategy stays current and it keeps compounding and working for you and doesn't sabotage you or blindside you. If you have all 5 of these in place, you have a real tax strategy. If you're missing even just one of these, you already have a gap in your strategy. And the more revenue you do, the more expensive that gap becomes. So you really need to pay attention to this, especially if you're doing above 7 figures. And if your current situation isn't ideal, you want to improve it, you want to save even more money on the tax bill next year, this is exactly what I do for B2B service business owners doing $500K to $5 million per year. We will build this process with you to save you anywhere from 15 grand to over 50 grand every single tax year going forward. If you want me to show you where the gaps are and how you could be saving thousands of dollars, click the first link in the description. And if you like this video, subscribe for more tax strategies for service businesses, and I'll see you in the next one.